While gold has continued to set a series of new all-time highs this summer, silver continues to lag, but now it's retesting its previous May high just under $32.50 an ounce. Is this the time for silver to finally break out and play catch up with a vengeance to gold, as we've been saying it has the potential to do for months? In this silver market commentary, for September 27th, 2024. I'll go under the hood with silver supply and demand fundamentals, look at the latest charts, and offer three fantastic silver specials. Let me share my screen and we'll get on with our update. I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. We are a national physical precious metals and vintage U.S. gold and silver coin dealership operating out of Austin, Texas. If we can help you with any of your physical precious metals needs, we'd love to have that opportunity. In this update, we'll show you how silver has rebounded sharply to retest its previous May high, how it remains undervalued relative to gold on the gold to silver ratio chart. We'll go over the supply and demand fundamentals, which favor silver with a steady supply and increasing demand, which has led to a structural supply deficit now entering its fourth year. If silver were to run in price substantially, there's not a lot of new silver that's going to come out of the ground quickly because 80% of the supply comes as a byproduct of other metal mining like zinc, copper, nickel, and gold. And we've got three fantastic specials on silver 1 ounce rounds and coins today. This is a 1-year gold chart that shows how gold's rise has been relentless, setting a series of new all-time highs throughout July, August, and into September, peaking just the other day in the December contract at 2708 for about a 37% gain this year. Yet silver lags. Although it's up about 38% itself, it is just now retesting the high that it hit in May at 32.43, breaking that slightly at 32.48 on the close yesterday in the December contract in the futures market. So we've got a nice V-shaped bottom and a really sharp rebound in the month of September. As gold has ridden higher, silver has been dragged higher, but it's also now benefiting from the lower cost of financing thanks to the Fed cutting the rates, federal funds rate 50 basis point, and China has fired a bazooka of stimulus across their economic bow, trying to stimulate the deflation that's occurring in their economy with lower rates and lower borrowing requirements for things like property. So China is really trying to get their economy going again, the number 2 economy in the world, and a big consumer of silver themselves. Let's look at the gold to silver ratio chart. This goes back to 1995. You can see there are 3 levels tagged on the chart. 82.5 to 1. That's how many ounces of silver it takes to equal an ounce of gold. That's when the ratio has been historically high, although not so much recently. The equilibrium point's about 62.5 to 1, where they're fairly valued relative to each other. And at 48 to 1 or lower, silver is valued highly relative to gold. Today, the ratio remains above 82.5 at about 83 to 1, which is high. You can see how that narrowed down to about 73 to 1 earlier this year when silver did test that May high at 32.43 and gold was about 24.40 at that point in time. The ratio is still high, which means that silver can play a lot of catch up to gold still. And is this the breakout that we've been looking for? Perhaps. Let's go under the hood and look at some of the supply and demand fundamentals which are underpinning the silver market. This is from the Silver Institute, and it's a chart of silver supply and demand. If you look at the total supply, it's remarkably consistent on an annual basis, coming in at about 1,015 million ounces of total supply, comprised mostly of mine production, which averages to just about 850 million ounces a year, and reclaimed silver through recycling, which is about 165 million ounces a year consistently. Meanwhile, demand has been rising. If you look at the yellow shaded areas in the chart, you can see where the big changes have been from 2015 and 16 in industrial demand, electronics, photovoltaics, to the last couple of years, 2022, 23, and estimated for 2024. Where the lines are in red, that's where demand has actually decreased, not surprisingly, in photography. And we've seen a bit of a decrease in physical investment demand over the last couple of years. 2021 and 2022 were very high relative to the few years preceding that, and when silver bottomed during the 2014, 15, 16 period. But here's the real meat of this. Total demand has averaged about the same as supply going into 2020. And then that all started to change in 2021, where we had a 95 million ounce net deficit in 2021. In 2022, that was 263 million ounces. In 2023, 184 million ounces, and estimated for 2024, 215 million ounces. So we've got a consistent situation now where demand is higher than supply. And that looks to persist as time passes. So fundamentally, silver is looking pretty good in a supply and demand equation. This is a chart, a bar chart of that same information, basically showing surplus and deficit. And we've got a couple of big deficit bars off to the right, and that's projected to persist for the coming years. Looking at this a little bit differently, the total deficit over the last 3 years and estimated for 2024 comes in at about 757 million ounces, or about 24,000 metric tons, where the annual supply is pretty consistent at 1,015 million ounces, or 31 million metric tons. So the total deficit over the last 4 years is about 75% of annual mine supply and recycling supply combined. So this deficit looks to be consistent and ongoing, but it's going to increase when we see market evolutions like we've seen with Samsung announcing a new long-life solid-state battery. And this is a big, big deal. And here's why. It's going to help to replace lithium batteries, which are problematic because they catch on fire. And silver, which is going to go into these solid-state batteries, is a much better component for a couple of different reasons. Here's why. Number one, you could get a 600-mile range on a single charge for an EV, which is fantastic. And they can charge in just 9 minutes. Silver is one of the most conductive metals there is. Each battery will conceivably need a kilogram, or about 32 ounces of new silver per battery. And with global annual silver production, about 26,000 metric tons for mine production, if just 20% of global car production needed these batteries, 16 million vehicles, that would be about 60% of global mine production annually for silver. And if 35% of new EVs use these batteries, it would consume all of the annual current silver mining production. So that's substantial. So we'll see how these play out, but this is a game changer and a big change in potential demand for silver, making EVs much more viable for the public, not only in the amount of time it takes to charge them, but how far they can go on a charge, and including a lot safer where the batteries don't catch on fire. Looking at silver supplies above ground, looking at COMEX silver warehouse inventories, they're pretty good. We hit a low in 2016 at about 150 million ounces, a high in 2021 at about 400 million ounces. Today, we're about 300 million ounces. So you hear some chatter about the COMEX only having so many ounces of silver in inventory, or how they are hypothecated for futures transactions, 28, 29 to 1. Well, most of those futures transactions are just that, futures transactions that are used for either speculating or hedging. Very few are actually settled for demand. So there's some pretty good above ground supplies, which will help to hold the silver price in check a bit, but the fundamentals are looking really good. Let's look at the charts. Here's a 20-year chart that takes silver back to 2004 in the fall. You can see how the great financial crisis caused silver to take a real run from under 21 all the way to 48.60, how it stayed above $30 for 2011, 12, and 13 for the most part, 2011 and 12 for the most part, and then corrected in 2013, settled into a much lower range. Since COVID hit, it surged back up again to $29. Then we've corrected lower, and now we're testing that breakout over $30 an ounce, which is significant. Let's drill down on a 6-year chart. You can see how silver took off from under 18 to 29 on a bullet when it played catch up to gold at that point in time. And over the last 4 years, it's gone into a inverse head and shoulders pattern with the neckline at $29, which is usually where resistance can be found. And we found it there earlier in 2020 and again briefly in 2024. But now we're testing a breakout, which is very bullish for silver. And perhaps this is the chance for silver to really play catch up. This is that 1-year chart again. You can see we've got a double top right at about 32.50 that silver is retesting. And a break above that is blue sky territory. On the 6-month candlestick chart, you can see on a daily basis in the futures market, silver got to 32.75 back in May and went sideways for about 2 weeks and then corrected back down on profit taking. Held support at 29 pretty well into mid-July. Then it broke down to 26.50 on a daily basis. And now it's rebounded sharply. And now it's broken over its upside resistance blue trend line in the last couple of trading sessions. That session where it broke out with the red arrow, that big $1.50 gain, was the day China announced their stimulus program, which potentially underpins new demand for silver in China, which is material. We had 2 days trading at 32.60, which is near the all-time high. And then just yesterday, Thursday, in the futures market, we got a little over $33 at 33.02. So that wick is testing a breakout. And that's usually where you see the market follow over a period of time. So silver could consolidate a little bit here, could go sideways, could come down a little bit, but it's testing a major breakout as we speak. And if this is a chance for it to run, it could run to 35, 36 pretty easily. I continue to believe that silver should be over $40, closer to $45 an ounce, relative to gold above $2,650 an ounce today. Here are our 3 specials. We have Asahi refinery-made 1-ounce Buffalo silver rounds available. These are one of the most popular privately made refinery rounds. They're not just a no-name generic round. They're made by the prestigious Asahi refinery, which used to be Johnson Matthey, as low as $1.99 over spot. So if you're looking for a low-priced silver round, this is a great option. In fact, one of the best in the country. If you're looking for a low-priced sovereign minted silver round, we still have our 2023 British Britannias on sale at $2.79 over the silver spot price. And we've made our 2024 Silver Eagles even more attractive, taking 50 cents off of that price, dropping them down to as low as $4.49 over spot, which should be the best price in the country today. So that's 3 different ways you can harness physical silver if you want to add to your silver position in the current marketplace. Once again, we're American Gold Exchange. This is our contact information. If we can help you, we'd love to have that opportunity. And as always, I would like to thank our loyal clients for the business and the trust that you've placed in us over the last 26 years. We're now approaching $2 billion in business. And there's never a day that goes by that we don't thank you for what you have allowed us to do, which is be in the business we love to be in. And we hope that we can help you in the future with any buying or selling that you need. If you like our work, please subscribe to our YouTube channel and like this video and tell your friends. So thank you so much for everything. It's going to be really interesting to see how these markets continue to evolve for the rest of this year. So thanks again for your time today. Have a great week.